Great, a very good morning to you and welcome back. You're watching Business AM and right on time for Economic Review, where we are joined by a very intelligent group of panelists and guests. We have Mr. Edward Kusewa, an economic analyst, George Munger, Managing Partner, EMG Kenya, Gabriel Mwendwa, Investment Associate with Horizon Africa Capital, and Fest Gashoka, the Secretary General of the National Bar Owners Association. And today we are going to start with Fest Gashoka on this story where bar owners finally got a reprieve after the government lifted the ban on bars as well as the sale of alcoholic beverages in restaurants and eateries. These as President Uhuru Kenyatta extended the nationwide curfew by another 60 days. So is it time to celebrate for pub owners? Fest Gashoka, good morning.
Good morning. How are you?
Good, good. Okay, now Fest, what are your sentiments on the move to end the ban on bars? What are your thoughts on that?
First of all, I would like to thank God because on Sunday we had a church service of bar owners in Nakuru, nationwide.
Yeah.
And I think it has been proved to our members that God does work miracles. Number two, I would like to appreciate His Excellency and the government and the whole team.
Yeah.
Because they gave us instruction to sit down with government and discuss and come out with protocols. So we'd also like to appreciate him. So what we're going to tell Kenyans and our customers, it is business unusual. We are ready to start this business, but it is a must for our members to comply with the law and build confidence to our customers. The other thing is to tell our customers, welcome to our businesses, but kindly accept the change that is brought about by COVID-19 in terms of social distancing. We will not allow dancing. We'll have to clean your hands. Welcome, but in a new way.
Yeah, so there you have it. Welcome in a new way. Now, Gashoka, how many of your members are likely to reopen for business and how many do you see closing for good?
We have 54,000 members in 41 counties. When we did our research and analysis, we're going to lose 20% are going to close completely. That is a very huge number of investors who've been kicked out by fixed costs, the new regulations and what have you. But we are doing all we can to enable those members come up. For example, we're partnering with government to give them economic stimulus package. We're also partnering with other financiers to ensure that we don't just lose investors and employees in our business. But we're estimating around 20,000 establishments we're going to lose them.
Yeah, so there are 20% likely to be lost. But how do you feel in terms of support, the kind of support that you require to get back into business? What's your take on this?
We're calling on government and all the stakeholders, including the manufacturers through ABAC, to come up and ensure that this opportunity is not lost. And we're even coming up with the stimulus program, and also even the members we're going to come up with in business. For example, a bar that will hold 50 people with new COVID regulations is going to hold 20 people. So that is already a loss in business, and it may even end up in losses that may not that may also prevent them from coming in business. So we are working with all the members and calling on the government and the county government and even the financial institutions to liaise with the national office to come up with a package to loan our members money. And one of the guarantees we're giving to the financial institution is this: if you look at the loan book of bar owners in the whole country, and we have that research, majority of them do pay their loans. So we're calling on financial institutions and any other organization or company that can come up and help our members to liaise with us, to liaise with the association. We have a very strong association for us to enable our people to go back to business.
And as the Secretary General of Bar Owners Association, probably a word of advice for bar owners as they reopen on what kind of preparedness probably they should have, and also looking into COVID-19 measures probably put in place as we reopen.
The National Bar Owners Association, Balita, in partnership with the Association of Manufacturers, which is ABAC,
Yeah.
will carry out a national-wide training program of COVID regulation or COVID rules,
Yeah.
and any other thing, including we're even planning to partner with AMREF and some other organizations to ensure that we give psychological counseling to our members. And to prove to you that the association is powerful enough, for the whole 6 months that we've been out of business, in which case we were ordered to close, we were not consulted, no single bar owner in this country went to court. Despite that, that is their right, is their constitutional right.
Yeah.
We talked to them and we've complied with all the laws and the regulations. Of course, hakuwezi kuwa wawili watatu walikuwa na shida, but no single bar owner, restaurant owner or tourism establishment went to court. So that is the kind of guarantee that we're giving to our customers and also to the government, that the level of compliance from here onwards will be superb. The challenge we're giving to the government, in which case we're going to sit down on protocols, is for them to enable all the members of this industry to be members of the association. Because the association is the one that led the negotiation to ensure that they have reopened. And it is through us whom we've come up with an initiative called Bakumi Initiative, which is, it works the same like Nyumba Kumi, which is going to enable our members to come together and also comply with the law. So one of the plea that we've been left with is to request the government to accept that protocol of allowing all the bars in this country to be members of the association, because we'll be able to rein on them when it comes to non-compliance of the law.
Yeah. So Gashoka, does the training start today? Yes, Bonnie?
So the training is going, we are working on modalities the whole of this week, and then we will make sure we make it public.
All right.
Otherwise, we're going to train at least 35,000 establishments in this country to ensure that there is full compliance of the law. And this is a commitment that a promise we made to government. So it's something. And maybe I can add something.
Yeah.
Part of the fund that you're going to use is the 500 million that was given to EABL. And also so many other manufacturers are going to come up with their own packages to ensure that our members are trained. So what we are telling our customers, there is confidence of coming back to business. Welcome and let's enjoy.
Wow. Awesome. Awesome. Thank you so much, Fest Gashoka. Great to have you.
Thank you so much.
All right. So let's move on now where the weekly turnover at the Nairobi Securities Exchange for the period ended 25th September declined to 3.4 billion Kenya shillings from 5 billion Kenya shillings turnover in the previous week. The volume of shares traded reached 122 million shares, a decline from 176 million shares traded the previous week. The benchmark NSE All Share Index, NASI, added 0.13 points to close the week at 140.37. That is a gain of 0.09%, but an overall year-to-date loss of 15.65%. The NSE 20 and NSE 25 year-to-date performances stand at a negative of 30.39% and 20.93% respectively. Boosted by strong interest from foreign investors, the banking sector was the most actively traded, with shares worth 1.7 billion Kenya shillings having been transacted, accounting for 50.79% of the week's traded value. Gabriel, I'd like to pick your thoughts on this, where let's look into how banks have continued to perform in the break of a crisis. How have banks performed, and what more can we expect as we move into the last quarter of the year 2020?
Thank you, Tabitha. So if I may, I'll start with a bit of the fundamentals, borrowing from what we saw from the half-year results that were reported by most banks. All the top banks were very prudent in that they increased their provisions significantly. Looking at KCB, Equity, Barclays Bank, they all increased their provisions significantly. So what that meant is, of course, that they reported a dip in profits. Now, the reaction by the market was obviously to heavily sell some of the banking stocks. But there is something I've come to learn, and if you talk to some of the people who are providing advice in this market, people have already come to accept there's a certain bandwidth within which these banks play. For example, if you look at Equity Bank and KCB, they play within the bandwidth of 30 to 50, or you can push it to 55. So, and since we started seeing the regulator taking an active approach or interaction with the market, or crisis affecting the banking sector, it's become an obvious fact that the stocks will dip, get towards 30, and then after a while they'll come to close to 40, stabilize, and then after the situation is over, they then go back to 55. So investors are actually relying more on that kind of a trend analysis and expectation over and above the fundamental analysis, because if you look at what happened to KCB, they still had an average return on equity of over 14%. There are very few companies that can report that consistently, even despite that level of provisioning. But I think the trading that we're seeing currently is informed by, of course, we're coming to the end of a quarter, and of course after September, then we see the results sometime in October for Q3 of the year. So I mean, because people have already seen a very huge dip in performance at the half year, then you can see in the next quarter no one is going to be surprised. So we don't expect a dip as such. So that's why you're seeing there's not much trading at the moment, because people are deciding to hold. But in terms of performance, I think we've seen the worst. If there's any more provisioning to be done, then we'll see it, but I doubt it will surpass what we saw in the half year. The challenge would be with the smaller banks, some of which I think we've mentioned previously. I've looked at some of the smaller banks who have actually not provisioned as much in the half year. So those ones, we may see them need to do more provisioning come the next quarter.
All right, so Gabriel, moving on, we saw that Equity Group Holdings was the most active counter in the banking sector with 35 million shares, which were valued at 1.2 billion shillings, changing hands at between 35.45 and 37 Kenya shillings. KCB moved 7.6 million shares valued at 291 million shillings, and for that was for 38.9 shillings. Are these two banks performing any better than the rest, and what's the likely boost? You have earlier mentioned that, but what's the likely boost when it comes to these two specific banks?
Okay, so I think again, it's what traders and investors in the market have come to associate the two banks with, that they sort of trend together. So when you see one trending towards a certain range in price, you expect the other to follow. Given where KCB is at around 38 shillings and Equity at around 35, then what the market is essentially saying is that we expect this gap to be closed slightly over the coming few days. Again, if you look at valuation-wise, there's no big difference between the two banks, because yes, Equity Bank, I'm not sure which one has more shares, but there's one that has way more shares that are listed. Of course, that increases the amount of shares that are available for trading. So that creates a difference in terms of the pricing, but naturally they trend together. In terms of performance, the level of provisioning was the same. If you look at the amount of provisions by which they increased their books by, the reduction in profitability. But again, in this case, I'll stick to the return on equity percentage. This is what investors would really look at. All these banks are in the mid-teens. KCB at 14, Equity at around 13. So these banks are performing well in terms of returns on percentage-wise. So investors have come to peace. They're saying, even if you need to provision, you will provision. We're still seeing the profits. Your balance sheet is still very healthy. You still have a lot of liquidity. If you look at, there was a report, we have 250 billion increased in government securities. That tells you these banks are liquid. We've seen what KCB is doing with National Bank of Kenya. We've seen what Equity Bank is doing in Democratic Republic of Congo with expected commissions there. So all these banks are very actively looking at their structure. We've seen what Barclays Bank is doing with its parent company. So I think fundamental-wise, Investors are not worried, so it's now just playing with the trend in the prices.
Okay, so doing well in terms of returns. Let me cross over to George Munger and probably get to hear his sentiments on that. George, good morning.
Morning, Tabitha. How are you doing?
I'm good.
Yes. I think if you look at the NSC over the last 3 years, my worry is that our trading, the counters that are active are shrinking day by day. That is my biggest worry. We have quite, I think, almost 6-7 counters at the NSC. We have agricultural, we have automobile, we have the banking industry, we have commercial services, we have construction, we have energy and petroleum, we have insurance. And if you look at the active counters currently, you can talk of banking industry, and you can talk of the telcos, and maybe the insurance industry. The rest of the industries are either in a lull or there's very little activities in those counters. And in fact, if you look at energy, where commercial, where the likes of or construction, where the likes of Athi River mining are, some of those companies have been suspended even from trading, and some have pulled out. Remember when we were talking of Samia the other day that closed operations. So that is my biggest worry. Telcos. When you talk of telcos, then the only company that sticks out is Safaricom, and of course that is because of their performance year on year. If you look at the performance between 2018 to date, the performance has been increasing year on year. They reported 54 billion profit in 18, 62 billion in 19, 74 billion the other year, and we expect Safaricom's profit to continue increasing even amidst the COVID pandemic. Banking counters have been performing quite well, albeit for the last half year. That is the year between January to June 20, where we've seen, just as Gabriel has put it, a bit of provisioning on their assets, and that has pushed their profitability downwards. Remember, Equity reported a 14% drop in their profitability, and KCB reported almost 30% drop in their profitability, and Cooperative Bank reported, I think, 3% drop in their profitability. But for the banking industry, I think the fundamentals are strong, and we expect them to bounce back. In fact, in the quarter ending September, I expect maybe minimal drops or slight improvements in their profitabilities. But I mean, that is for banking industry. The other counters, I think NSC has their work cut out. We need to start seeing activity on the other counters. Remember, Kenya is an agricultural country. We need to see activities on the likes of Kakuzi. We need to see activity on the likes of Williamson Tea. Why I'm not talking about those counters. I think NSC needs to do something just to rekindle transactions or to rekindle trading in those other countries. Remember, that is our Kenyan Wall Street, and therefore, if there's minimal activity in that front, then it means the economy, that reflects how our economy is projected outside there, and how economy looks outside there. So I think Jeff Dundo has his work cut out. He needs to at those other counters and how we can rekindle activity on those other counters, Tabitha.
Yeah, sure. Thank you, George. So moving on to Edward Kusewa. George has mentioned something to do with telecoms, where you see Safaricom has really outdone the rest. Probably what sort of, what kind of a leaf can other telcos borrow from what Safaricom is doing? Edward.
Okay, thank you very much. I think we need to be able to understand whether the economy is able to protect investors and whether that economy is able to develop enterprise. I think we must be able to look at both the current market conditions and the future market conditions, and to be able to analyze market forces. And those market forces obviously have everything to do with the supply of capital and the supply of investment opportunities in the telcos. And once these conditions start stabilizing, we may be able to start analyzing whether there's foreign capital that comes to this part of the market.
Okay,
that question.
Yes.
Yeah, so basically, I mean, and generally the whole macroeconomic environment, which the government is speaking about, especially the physical environment,